What is Bitcoin ETF and what value will it bring to the market? Today, we'll be discussing Bitcoin ETFs, what they mean, and what value they could bring to the market price and the future of Bitcoin. With so much buzz around Bitcoin ETFs, let's break down why they're important and how they impact the future of the crypto market. My name is Kelvin. Just for your information, I am not a financial advisor, so please do your due diligence and consult with your financial advisor. My videos are only for educational and informational purposes. So, having said that, what is a Bitcoin ETF? A Bitcoin ETF, or exchange-traded fund, is a financial product that allows investors to gain exposure to Bitcoin without directly owning the cryptocurrency. ETFs are popular in traditional markets because they make it easier for investors to diversify their portfolios. Instead of owning individual stocks or assets, an ETF bundles multiple assets together and allows investors to buy shares of that bundle. A Bitcoin ETF works similarly. It tracks the price of Bitcoin, allowing investors to buy and sell shares of the ETF on traditional stock exchanges without the need to manage Bitcoin wallets or deal with crypto exchanges. This makes it an attractive option for people who want exposure to Bitcoin but may be hesitant about navigating the complexities of the crypto market. Making Bitcoin accessible to traditional investors. One of the key benefits of a Bitcoin ETF is that it opens the door for traditional investors who have been on the sidelines. Many institutional and retail investors are familiar with ETFs and feel comfortable trading them. By offering a Bitcoin ETF, these investors can gain exposure to Bitcoin without having to go through the process of buying, storing, and securing the cryptocurrency themselves. This is especially important for institutional investors like pension funds, mutual funds, and hedge funds, which often have strict regulations about what kinds of assets they can invest in. A Bitcoin ETF provides a regulated way for these large institutions to enter the market. Bringing liquidity to the market. Another major advantage of Bitcoin ETFs is the liquidity they can bring to the market. Liquidity refers to how easily an asset can be bought or sold without affecting its price. The more liquid a market is, the easier it is for traders to enter and exit positions without causing large price swings. Introducing Bitcoin ETFs to traditional stock exchanges can bring more investors, potentially boosting market liquidity. However, this liquidity applies more to the ETF itself than directly to the Bitcoin market, unless the ETF is backed by actual Bitcoin purchases, a spot ETF. More liquidity typically results in less volatility, making the market more stable and less prone to extreme price swings. Increased legitimacy and confidence. The U.S. Securities and Exchange Commission, SEC, recently approved multiple spot Bitcoin ETFs, marking a historic moment for cryptocurrency regulation. This approval allows investors to gain direct exposure to Bitcoin through exchange-traded funds without needing to purchase or manage Bitcoin directly. This increased legitimacy further encourages more people to invest in Bitcoin, leading to a broader acceptance of cryptocurrency as a mainstream financial asset. Impact on Bitcoin's market price. The approval of a Bitcoin ETF by regulatory bodies, such as the SEC, has already begun to impact the cryptocurrency market significantly. With ETFs now widely traded, they offer an easy and regulated way for investors to gain exposure to Bitcoin without directly holding or managing the cryptocurrency. This increased accessibility has the potential to drive substantial demand for Bitcoin, attracting institutional and retail investors alike. Historically, major financial developments like the introduction of futures contracts or exchange listings have positively influenced Bitcoin's price. Similarly, the approval of Bitcoin ETFs could lead to an influx of new capital, boosting liquidity and investor confidence. Analysts anticipate Bitcoin ETFs will surpass the market cap of gold ETFs within 2 months, 5 years ahead of initial projections made by experts. Market volatility and risks. While the introduction of Bitcoin ETFs could bring many benefits, it's important to consider the risks as well. The crypto market is notoriously volatile, and even with an ETF in place, investors are not immune to price fluctuations. Bitcoin's price can still swing dramatically in response to market news, regulatory changes, or shifts in investor sentiment. Additionally, the influx of institutional investors into the market could lead to increased volatility. Large institutions can move significant amounts of money in and out of the market, which can cause price swings. Investors should remain cautious and understand the risks before jumping into Bitcoin ETFs. Long-term value for Bitcoin. Looking ahead, Bitcoin ETFs could provide long-term value for Bitcoin's market by introducing a steady stream of institutional investment. As more institutions enter the market through ETFs, it could create a more stable demand for Bitcoin. This stability could reduce volatility over time and help Bitcoin establish itself as a more reliable store of value. Moreover, as Bitcoin ETFs become more widely adopted, they could serve as a bridge between the traditional financial world and the crypto space. This integration could lead to more innovation and financial products centered around Bitcoin and other cryptocurrencies, further boosting their value. The global perspective on Bitcoin ETFs. Bitcoin ETFs aren't just limited to the US market. Countries like Canada and Brazil have already approved Bitcoin ETFs, and the results have been promising. In Canada, for example, Bitcoin ETFs have attracted significant interest from both retail and institutional investors. These early successes provide a glimpse of what could happen in the US and other global markets once Bitcoin ETFs gain broader approval. If more countries approve Bitcoin ETFs, it could lead to a global surge in Bitcoin adoption. Investors from around the world would have easier access to Bitcoin, driving up demand and potentially boosting its market price on a global scale. Potential hurdles and risks. While the approval of Bitcoin ETFs marks a significant milestone, challenges remain. The journey to approval has been long and fraught with regulatory scrutiny, with the SEC previously rejecting or delaying proposals due to concerns about market manipulation, fraud, and investor protection. Although approval is now a reality, these risks persist, especially regarding the transparency and stability of the Bitcoin market. Investors should remain aware that while Bitcoin ETFs increase accessibility, they do not eliminate the inherent risks and volatility of the cryptocurrency space. The future of Bitcoin ETFs and the crypto market. The approval and integration of Bitcoin ETFs into mainstream financial systems represent a turning point for the cryptocurrency market. These ETFs may pave the way for other innovative financial products, such as Ethereum ETFs or multi-asset crypto portfolios, further bridging the gap between traditional finance and the crypto space. Over time, Bitcoin ETFs could help establish Bitcoin as a legitimate asset class, comparable to gold or other traditional commodities. This development has the potential to drive increased innovation, wider adoption, and long-term value creation in the crypto market. However, maintaining regulatory compliance and addressing market risks will be key to sustaining this momentum. Thanks for watching this video on Bitcoin ETFs and what they could bring to the market and the future of Bitcoin. If you found this information helpful, make sure to follow my account for more crypto updates. Until next time, cheers.